Thank you. Moving on to a 17 newsmaker now, Dave Anderson from MoneyWise joins us this morning to talk about the stock market. And as we've heard as we head into the new year, and first thing, Dave, fears have been mounting as the U.S. stock market appears to be headed for its worst December since 1931, when the country was pretty much in the middle of a Great Depression. Why is there this fear?
Well, the stock market right now is facing a lot of different headwinds. You have the trade war going on, you have the potential government shutdown, you have the Fed raising rates, which kind of douses the stock market fire. And then you have the fact that the stock market's been going up for 10 years. And eventually the market comes down. So all of those things have traders really jittery and just willing to sell at any moment.
And I'm guessing one of those things that's kind of looming in everyone's minds right now is if we do actually have a government shutdown, that's going to play a big role in this.
Yeah, absolutely. You know, that's certainly going to affect a lot of people's jobs. You know, when you have a government shutdown, which, you know, we've had a few, many times people think, well, yeah, I don't really feel any different because the government shut down. And what they're forgetting is that behind the scenes there are lots of workers out there that are no longer getting paid. Now, they might ultimately get paid down the road, but that really affects their life right now. And you couple that with all of the other things that we're facing, and it doesn't bode well for the stock market.
And talking about how this could impact people, what would the effects of a recession look like for, you know, the average person?
Yeah. You know, we talk right now a lot about the stock market, but I think the bigger concern is a recession. And the reason I say that is if you're invested in the stock market, well, it's come down. That's okay. That means stocks are cheaper. If you hold on to them, you know, they will eventually come back up. Are you preparing for a recession? What follows a strong economy is a weak economy, is an economy that's getting smaller. And that is coming. Now, whether that happens in 2019 or 2020, it's going to happen. And so what I would want people to take away from this is, hey, I need to prepare for that. I need to make sure that my debt is paid down. I need to have cash, because if you were to lose your job, you know, you have to have a plan for that.
Yeah, and speaking of preparing for that, do you need to address anything with your 401k or any of your, make any adjustments with your investments because of this?
Yeah, I would say yes if you're not doing the right thing. So let's say you're retired or close to retirement and you've been trying to eke out every possible gain, and so you've had almost everything in the stock market. Well, that's a person that should probably pull back a little bit with the risk that they're taking. Now, if you're already doing the right thing and you're diversified, you're not taking too much risk, don't get too obsessed with your portfolio coming down, because it will eventually come back. The key is just to stay the course.
Now, maybe to calm some fears, you know, the economy has been pretty strong for a while now, and this is kind of just a normal, natural cycle of our economy.
Yeah, absolutely. You know, we don't like recessions. They don't feel good. People lose their jobs. But they are also part of our economic cycles. And markets don't always go up. They eventually come down. And so that's what I want to remind people of. You focus on what you can control. Make sure your human capital is increasing. You're getting training and again, saving money. But beyond that, you know, just understand that recessions do happen. It's part of life.
David Anderson from MoneyWise now this morning. Thank you for joining us.
Thank you.